That's right. I'm going to be playing this oil crash by not investing into oil at all. In this video, I will be covering 1. Why buy oil tanker stocks right now? 2. The oil tanker bonanza. 3. The 3 oil tanker stocks I've already started putting money into. And 4. What to expect next. Let's do it. Alright, let's cut to the chase. Oil just crashed. I mean, it absolutely shattered the floor. It literally went negative. And when something like this happens, we as investors have to ask ourselves, where is the opportunity here and how can I manage my risk? As you have probably gathered by now, if you've seen my other videos about oil, no, I will not be investing in USO due to the reasons I list in this video here. Other obvious candidates for an oil investment might be the big guys like Chevron, ExxonMobil, BP, and to me, those are understandable choices. But in my opinion, they have a lot of different operations going on. And as a genuine novice to investing in the oil sector, I want something that's more clear-cut and makes sense to me. Something like, if this happens, then this happens. Not something like, if this happens, well, then that affects 5 different factors of this company that I've invested in, and now I have to weigh all these different categories and see how they will affect the price. You understand what I'm saying. Here's how we're going to break this one down. First, why buy tanker stocks now? Second, the current state of oil tankers, aka oil tanker bonanza. Third, which 3 oil tanker stocks I've bought. And finally, fourth, what comes next and how long should you hold these positions for? We'll start the lineup off with why now? Let's set the stage of what might be going through a typical investor's mind right now. Well, negative oil prices means that at one point I could have been paid as much as $40 per barrel of oil just to take it off someone's hands in May. I could then sell that barrel of oil to someone else for $17 in July. That's a $57 profit per barrel. Hey, empty the downstairs bathroom. I'm gonna buy barrels of oil, crude oil. We're gonna be rich. It's not that simple. We need to focus on the issue of storage because that is what today's video is all about. Let's go back to our little example. If you plan on selling the barrels for $17 each in July, your biggest challenge is going to be finding a place to store those barrels until July. No, you cannot legally store them in your house. And if storage is your biggest problem, then it's everyone's biggest problem. And that, ladies and gentlemen, is my beautiful and seamless segue into oil tanker stocks. Well, I want a more dramatic pause for that. And that is my segue into oil tanker stocks. Aside from locations on land, oil tankers are a popular place to store oil. And these guys don't just do it for free. You obviously have to pay them to hold your oil. So with the shortage of storage due to unbalanced supply and demand for oil, oil tanker services are suddenly in high demand. Many oil tanker stocks have entire fleets of ships, some of which are called VLCCs or very large crude carriers. I didn't make that up, that's really what they're called. These can hold up to 2 million barrels of oil. They also have a different kind of tanker called Suezmaxes or Suezmaxes, I'm not sure. But nonetheless, these have lower storage capacity, yet they're still in high demand. I'm going into so much detail because it will come up later, you'll see. And all this demand for storage leads to oil tanker bonanza. Let's talk about the current state of oil tankers. Hint, they are rolling in money right now. Aside from my actual stock picks later, this might be the most exciting part of the video because get ready for some digestible research. An oil tanker broker in Singapore said, "It's the first time ever that we got more calls to book ships to store oil than to move it." And guys, you know I can't pronounce things. Robert Hveid McLeod, chief executive of Norway-based Frontline Management, said the average daily freight rates for VLCCs are hovering at about $150,000 per day. And that's compared to an average rate of only $10,000 in April the year before in 2019. Guys, come on. You're telling me that a year ago in April 2019, the average rate for an oil tanker to carry oil was 1/15 of what it is right now. That's 6.6% of the current rate. I don't know the definition of a bonanza, but this sure sounds like one. And I hope you saved an appetite for more information, because VLCC tankers raised their rates from about $90,000 to $180,000 per day. And this happened very recently. And another source confirms, saying in late March, rates had doubled in the Middle East and China to about $180,000 per day. Their rates have gone into orbit. Tankers are effectively doubling their revenue from storage, and their costs are staying relatively the same. In fact, I'll bet you that some of their costs are even going down, because oftentimes the biggest cost for a tanker is fuel. Well, now, see where I'm going with this? Fuel is extremely cheap. Their biggest cost is getting reduced. So with their storage revenue theoretically doubling and their costs dwindling, this is indeed an oil tanker bonanza. I want to be part of a bonanza. A money bonanza. Well, you might be able to, buddy. In case you guys didn't notice, I'm trying to do this whole 2-character thing. If you like it, let me know in the comments. Because up next, we have which 3 oil tanker stocks I've been buying into. I'll just tell you right off the bat. I've started getting into small positions in TK Tankers, ticker symbol TNK, Nordic American Tankers, ticker symbol NAT, and Double Hull Tankers Inc. or DHT Holdings, ticker symbol DHT. Now here's the fun part, the cool part, the educational part, the reason why a lot of you guys are here, the research. Which, by the way, if you haven't subscribed yet, why are you depriving yourself of this digestible due diligence? But really, guys, if I earn your like today, please destroy that like button for me, hit that subscribe button, turn on those notifications, and Matthew, stop talking about this because you're losing them. TK Tankers, okay? For each stock, I'm going to give you their market cap, their dividend yield, their fleet, and why I like them as a buy. So TK Tankers has a market cap of $775 million. They have no dividend yield as of now, and their fleet consists of 55 double-hull tankers. This fleet includes 26 Suezmaxes and 1 VLCC, which, by the way, is owned in a 50% joint venture. One of the reasons why I'm confident enough to bet on this company is because of their fourth quarter earnings report in 2019. In Q4 in 2019, they crushed their numbers from Q4 in 2018, and they saw huge improvements from 2019's third quarter to fourth quarter. They credit this improvement to none other than high average tanker rates. And those rates that gave them such a solid fourth quarter are not even close to the high rates we're seeing today. The momentum continues within these earning documents as they highlight strong tanker rates of $51,700 per day and $38,600 per day in their contracts for the first quarter of 2020. And if they consider 51K strong, then they must consider the 100 to 200K a day rates we're seeing now really strong. So with TNK already optimistic with these 51K a day rates, I can't wait to see what they do with these new higher rates, which is why I'm confident they'll do well in the short to mid term. Stock number 2, Nordic American Tanker, ticker symbol NAT. They have a market cap of $800 million with a 5.51% dividend. That is fantastic. Now keep in mind, these guys have been paying dividends since 1997. That's before I was born, and it comes out to something crazy like 90 something quarters in a row they have paid a dividend. This consistency in dividend payments and their constant drive to increase their dividend are both good things in my opinion. Lastly, their fleet consists of 23 Suezmax oil tankers. So why Nordic American Tankers? Well, for starters, all 3 of these stocks have long-term debt, and I believe that's something that's typical in this industry, but what's not typical is NAT's long-term debt to total assets ratio, which is the lowest in the industry. Additionally, NAT's tankers have been booked at, there's that word again, a strong price of just $53K a day. I refer you to my previous point about TNK's strong rates. We also see that their average costs are only $8,000 per day per ship. So if they're getting paid $100K a day, which is on the lower end of the rates today, and their costs are $8,000 per day, you're telling me that NAT has a 92% gross profit margin. Are you kidding me? Guys, 92%, that's wow. This seemingly financially responsible company is raking in 92% gross profit every day. Need I say more? Number 3, our final stock, DHT Holdings, or ticker symbol DHT. They have a market cap of $1.2 billion, the biggest one on the list today, and it has a whopping 15.13% dividend. Their fleet consists of 27 VLCCs, very large crude carriers, and that's honestly the main reason why they're on this list. They simply have a greater number of VLCCs, which means higher potential capacity, which means higher potential rates per day. And you can see proof of that right here. While the rates of the other two stocks, NAT and TNK, for Q1 of 2020 were both about 50K a day, the VLCCs have fetched an average of 81K per day. That $31,000 difference every day is likely due to the higher capacity of the VLCCs. And to put things in perspective, get this. Because of that $31,000 difference, every month, or every 32.25 days to be exact, of the first quarter, DHT will be making $1 million more per ship than TNK or NAT. In other words, say a TNK ship is making 50K a day and the DHT ship is making 81K a day. At the end of 32.25 days, the DHT ship will have made $1 million more than the TNK ship. But do keep in mind that some of DHT's VLCCs are locked into unfavorably long-term contracts that are some pretty brutal rates. And additionally, the sheer size of these boats could make their accessibility to ports where they would ideally pick up the oil a little harder. Nonetheless, I think there's potential here, and that's why I've bought into DHT as well. So what next? Where do we go from here? What can we expect? And how long will I be holding these stocks for? These new rates are not a long-term sustainable change to the oil tanker industry. These companies will not be raking in the bills like this for too long, but it could last for a few months. However, I will always want to share with you guys both sides of the story, so Here's a Barron's article that essentially says long-term storage contracts are already lower, about 80 to 100K, because oil producers see this supply imbalance tapering off within the coming months. Furthermore, Jeffrey Pryber, the CFO of International Seaways, says International Seaways executives don't expect these rates to last forever. In the short term, we're absolutely in a bonanza time. But after that, rates will moderate from there. I should note that International Seaways has 11 VLCCs, and yes, that's where I got the idea to call it Oil Tanker Bonanza, okay? Jeez, I'm sorry. I was gonna give him credit eventually. Now, I found a few more articles talking about the expected decline in storage rates for oil tankers in the coming months, like this one and this one. I'm not gonna go over them in too much detail because I think you guys get the gist. But lastly, the last point I want to make today is that you have to remember oil tanker companies were not made to store oil. They were made to store and transport oil. So even if demand for storage falls and demand for oil rises, oil tankers will be needed to transport the oil to meet said demand. The point is, this is a short to medium term hold for me. I just wanted to healthily represent both sides of the argument. Again, this is not a stock pick. I'm not a trained professional by any means. I just wanted to give you some of the research that I have accumulated and hopefully give you a launch pad and some tools to do your own due diligence, as you always should. So that about wraps it up for me today, guys. If you liked what you saw and you want to see more of it, the logical thing to do is to hit the subscribe button and turn on those notifications. Additionally, if you want a 300% return on your next investment, be sure to obliterate that like button so that the YouTube algorithm knows what's good. As always, we're going to end with the quote of the day. In the middle of every difficulty lies opportunity. That is from the genius Albert Einstein. And right now, what I'm trying to say is that, we're going through a difficult time. Obviously, this pandemic is terrible. And this crash of oil is a difficult time for a lot of people. So many people have lost money. But in difficult times, there is opportunity. With that being said, that's all I've got for you today. Thank you so much for watching all the way through. I really appreciate it. And I'll see you in the next one. Peace.